Usually when we do these on-chain analysis videos, we're looking at Bitcoin specifically. And the reasons are obvious. It's because Bitcoin is the biggest project in all of crypto, the most important project, and as the longest running project, it does have the most on-chain data to analyze. But Ethereum has a pretty good amount of data as well. It's also the undisputed second largest project in cryptocurrency and has been for quite some time, by the way. So stick around for today's video. We're going to switch things up and take a look at the strengths of Ethereum's blockchain based on-chain analysis, stats, and metrics. Welcome to the channel. My name is Maddie and this is Altcoin Buzz. We are a crypto investment research company. For the most up-to-date research available, do be sure to check out Altcoin Buzz Access Pro. Membership information can be found by clicking the link in the description below. And as a friendly reminder, whether we're talking about on-chain analytics for either Bitcoin or Ethereum, whether we're talking about altcoins, just, keep in mind that this is a volatile space. There is corresponding risk in cryptocurrency. And so this video is informative in nature. Do not take it to be official financial or investment advice. Okay, let's get right into it with a discussion of Bitcoin and Ethereum, considering the exchange data of both blockchains, because really Bitcoin and Ethereum are pretty different in all kinds of different ways. But one of the most important differences when we look on chain is with exchange data. So take Binance, for example. It started in 2017, just a few years ago, and had its first full year of operation in 2018. By the way, if you haven't checked out our Binance 5th anniversary video, which we just published, do be sure to take a look and watch that one. But getting back to Bitcoin, it started long before that, way before 2017. So the question is, what did hodlers from 2013, from 2015, what did they do? Well, they moved their coins into non-custodial wallets and or cold storage. Now this means exchange flow, how much Bitcoin is moving onto exchanges. That metric, exchange flow, tells us much more than just how much Bitcoin there is on a particular exchange as reserves, because investors only move from non-custody or cold storage when they're ready to trade or sell. Ethereum, however, is much more recent, and more ETH stays on exchanges since you need it to pay for gas for all kinds of non-Ether but still ETH network transactions. And so exchange reserves of Ethereum are going to be higher and more consistent for ETH, and differences from the mean are important as there's always a set amount on exchanges for trading purposes specifically and to pay for that gas. So with that context in mind, let's consider indicator number one, ETH exchange reserves. And as we've just said, there's always some ETH on exchanges. So what we want to do is see to what extent that supply changes in the exchange reserves. If the mean is, for example, 100 ETH and reserves climb to 150, this is a sign that we are at or close to a market bottom, because investors are quick to sell as more are sending their ETH to exchanges. They're sending their ETH to exchanges in order to sell it. But when exchange reserves decline below the mean, that could be a sign of a market top. And in these cases, we recommend, first of all, when exchange reserves are increasing, then since a bottom is in, or we're at least close to a bottom, then you may want to consider looking to buy ETH. By contrast, when exchange reserves are declining and are below the mean, we recommend our slow and steady dollar cost averaging technique, the DCA technique, in order to add to your positions. And yes, it may sound counterintuitive that when exchange reserves are increasing, you should increase your positions too. But remember, it's close to a bottom here. At least that's the theory. And while we don't time the market perfectly, the odds are in our favor to act in that way. Okay, that theory is all well and good, but what exactly is happening now, today? Take a look at this. If you examine the little red circle on the far right of this chart, we do get a confirmation of declining exchange reserves that actually started a couple of months ago. And that confirmation means the bear market is still here. We all knew this, but you should continue or at least start your DCA strategy if you've not already. Indicator number two is ETH funding rates. Now, funding rates are something traders use. For leveraged positions like futures, traders have to pay to maintain their positions. And positive funding rates are bullish, meaning more traders are going long, whereas a negative funding rate means more traders are going short in their new trades. And funding rates can give us an idea about how stable the market is and which direction traders are watching more closely. So in bear markets, for example, like we have now, negative funding rates are common, right? Goes without saying. Many traders jump on the downward trend and try to trade with it, and the idea that the trend is your friend here kicks in, and so it's a bit of a virtuous cycle that's self-reinforcing. But for ETH, this has not happened, because even as the price is declining, funding rates are still positive, which you can see in this CryptoQuant chart here in the green. So the positive funding rate means that investors are still bullish on ETH despite what's happening currently with its price. Our takeaways from this bullish observation are that traders still like ETH for two reasons. First of all, they are bullish on the merge and see it as coming to fruition soon, which means positivity for ETH. And number two, traders think the merge can help ETH decouple from Bitcoin. Now, decoupling has been a topic for a long time, and we're not going to rehash it here, but suffice it to say that many believe that since Bitcoin's objectives are so different from Ether's, that something's got to give in a sense. And that's vital for ETH's growth to be able to decouple in terms of its price performance compared to Bitcoin. That's despite both being good long-term investments, by the way. And with EVMs, Ethereum virtual machines, smart contracts, and dApp building, ETH does have more in common with other layer ones like Avalanche, BNB Chain, and Solana than it does with Bitcoin. So for example, most of Bitcoin's development is not from sidechains or apps, although Rootstock, Liquid, and Stacks do exist, to be fair, but most of Bitcoin's development is in the maintenance and improvement of Bitcoin's source code. ETH, BNB, and AVAX have lots of developer activity, but that's because they have devs who are trying to build the next OpenSea, the next Uniswap, maybe the next PancakeSwap, or the next Trader Joe. It's a large fundamental difference that we're going to be watching in the future. But to wrap up our observation when it comes to this particular indicator, funding rates, traders are positive right now when it comes to this metric and Ether. And that's despite both the current price of Ether and the bear market conditions we're experiencing. Finally, here we're considering miner revenue because, as you know, miners are a very important part of any POW, any proof of work chain. And even with the merge coming imminently, mining is still going on to secure new blocks. And mining revenue is way down on Ethereum. It declined 45% from May to June, which is a huge difference in terms of a monthly drop. Now, miners often sell their block rewards, but there's a difference between wanting to sell and having to sell. And when ETH was in a big bull market, miners did sell for extra profit. Yet when prices are cratering, as they are right now, often miners are forced to sell kind of against their will just to maintain their operations and payments on all their hardware. Of course, there's a lot of overhead there, it becomes very expensive. So does that then introduce the variable of increased selling pressure on Ether? Yes, absolutely. But does it also suggest that the current market may be oversold? Also yes. So where does that leave us? Well, exchange results look bearish, and the downtrend below the mean Ethereum exchange reserves is confirmed, but ETH funding rates look bullish. Traders entering new long positions despite terrible downward price action, that's always a good sign. Miner position activity right now is kind of neutral, probably neutral at best though, to be honest, based on declining revenue and ETH prices. So keeping score at home, that's one for bullish, one for bearish, and one for neutral/bearish. It doesn't seem so confusing that ETH, and by the way, many other projects, are lacking direction and trend right now, because no trend other than keeping the bear market going for a while based on indicators like these seems to be the new reality. This is why we like dollar cost averaging as a strategy, aka DCA. You don't have to try to time anything, but if you believe things will improve eventually for ETH, then it's sensible to buy and hold right now. And no matter how sure or not you may be, you can buy more ETH when prices go down further, potentially, and then see the value grow that much more when prices rise again. It also takes the emotions out of it. Automating your trades with DCA strategies is very helpful for that reason, if nothing else. So guys, unlike some of our on-chain videos, the only clarity we really have here is honestly a lack of direction, but the indicators are still valuable for what little signs they do show us. And if the market doesn't know what it's doing just yet, then At least it's good for us to know that. And of course, if you like these on-chain analyses, Bitcoin, Ethereum, if you like other coverage of altcoin projects and hidden gems out there in the crypto space, then the Altcoin Buzz Access Group is for you. That is where you're going to get the most up-to-date and freshest research in the form of exclusive reports just for you. You can also talk to our amazing research team and reach out to them directly. This is where we share our personal investment and trading strategies as well. Plans start at $99 per month. Once again, check out the link in the description of this video. Best of luck genuinely if you do choose to invest, but as a reminder, not financial or investment advice. If you're still watching, kudos to you. Be sure to like, subscribe, share, hit the bell to receive notifications. Check out these other couple of videos. There should be one popping up here to my left, to my right. Stay safe out there, members of the Altcoin Buzz Army. As always, we do hope to see you again soon in our next video. Take care.